thing to remember is that most investors, when they get into a bull market or bear market situation, they are very slow to react to a change in environment when a new bull market begins or when a bull market gets over and a new bear market begins. Because investors typically look at the rear view when they drive. They don't look at the windshield. The windshield tends to be foggy at that time. The ideas aren't clear. They tend to get complacent. A lot of investors are today complacent that India is a great story and this will be a continuing bull market forever and ever. But say 3 years ago I'd come and addressed you in Bangalore, you would have said, no, I'm not shaky, I'd rather put my money in FD, even though the FDs at that time were paying less interest than dividends on the banks that you could have bought. So people tend to get very complacent once a bull market or once a bear market is 3 or 4 years underway. And one thing as investors you always need to do is to guard yourself against complacency. The world is a dynamic place, it keeps changing, you have to keep thinking about it. Making money is never easy. So it behooves you to spend some time thinking about these great issues, thinking about valuations, thinking about which stage of a bull market we are in. The new General Musharraf came to power, and yet in all that chaos the bull market starts. And it's an important point for all of you to remember. The great bull markets start when there's absolute despair. Okay? That's when you find the great values. That's when you should be looking to find the great values in the stock market. Not when the headlines proclaim India has arrived and that India is being a member of the United Security Council, or not when Tatas are bidding for chorus. Those are not necessarily the starts of the bull market. They could be the closer to the end rather than the start. But all great bull markets without exception start in despair. Start with people not believing. Start with people not being scared. Alright? The point is, how does an ordinary investor invest so that the 10 lakhs becomes 50 crores? Okay? So he achieves financial freedom, which is all what equity investing is about. Equity investing is not about excitement in life. If you want excitement, go to the Derby. If you want not about social service, you want social service, join Mother Teresa's ashram. It's not about adventure, join the army if you want to do that. Okay? Financial investing, there's only one reason you invest financially in markets. That is to be financially free. Alright? To create long-term wealth for your family. All the rest is absolute drivel, what people will tell you. There's only one reason to come to the financial markets, to create long-term wealth which can compound. Bull markets don't end with a whimper, they end with a bang. They end with people flocking the aisles where everyone has a stock tip, the panwala giving you stock tips. I don't see that kind of euphoria yet. So, I think like I said, like life, you can only understand backwards if the market has topped out on Friday or there's a way to go. But history, based on what I suggested to you, says that there is perhaps a ways to go, and that even in a bull market there can be long periods of correction and consolidation. But I see no signs of that the market has stopped as we speak. I haven't seen the signs. I think investing is firstly about character. I think you need to know why you're in the financial markets. If you're here for the excitement, go to the horse races. If you're here for, social service, you think, go work in a charity ashram. Investing is about creating long-term financial wealth. Be very clear about why you're doing that. That's the only reason to come to financial markets. If you're a day trader, arbitrager, speculator, the markets are not there to serve you. You may profit from it or loss from it, but I don't grieve for them. The market is only a place to create long-term wealth. So understand that. What helps you is patience. Understand, Rome wasn't built in a day, neither are great companies. They go up and down over long periods of time. But as long as management has a vision, is delivering, a couple of bad quarters, just because stocks go to fall $20 because of bad earnings, there's no reason to sell that stock. And a lot of reading. I think to be a better investor, there's one thing I can advise all of you to do, is you need to read a lot. I mean, I used to read when I was younger, 4, 5, 6 hours a day. I still read 3, 4 hours a day.